if you look at spending, overall spending for the folks in the top 10% of the income distribution, it's really gone nowhere for a little over the past couple of years. And you can see that in other places. I mean, if you go look at home sales, high-end home sales are doing poorly. If you look at vehicle sales, high-end vehicle sales are struggling. You can see that in collectibles. So high-end, high net worth households are much more cautious. But of course, middle-income households have picked up the slack. They're more clued into the job market. The job market's strong. They have jobs. Wages are rising. So the middle-income groups have picked up the slack left by wealthier groups, and lower-income groups are doing better also. But wealthy groups, they're essentially flat.
And Jimmy, the middle and low-income groups are what really matter to the president ahead of next year, right?
Yeah, listen, the new Republican Party has a lot more working-class voters, voters who may get hit pretty hard by these tariffs, as we've seen escalation. Listen, Mark runs a good economic model. If Mark's worried, I'm worried. And one thing I'm worried about is this trade war, and I don't see anything that has happened since the deal with China fell through back in the spring that would give me any optimism about trade going forward. So if you have a bull case on the economy and part of that case is a resolution of this trade war, I think I would rerun those numbers.
Mark, is there, a real concern about a trickle-down type recession? Everyone keeps saying the consumer's in good shape, our economy should be fine, but at the high end, if we are seeing this slowing, what could be the ripple effect?
Well, it matters. The wealthy, high income do account for such a large share of spending. If they pull back any more, and of course, their spending is very closely tied to what's going on in the stock market. We saw that with consumer confidence today. The University of Michigan survey fell sharply because that's very closely tied to consumer confidence, and that is key to wealthy household spending. If they pull back any further, and they pull back to the degree that job growth slows and unemployment starts to rise, then that hits the middle income groups and the lower income groups, and that's the fodder for recession. We're not there yet, but I agree with Jim. If the president continues to pursue his trade war, certainly if he escalates the trade war, the likelihood that the stock market falls, that wealthy consumers pull back, and that causes the job market to hurt middle and low income households, that's a recession. Those risks are very high.
But Mark, what if the Fed offsets some of that? I get that it's not a direct one-for-one offset with trade-related issues, but it would have some effect.
Sure, and I think they're trying, and they're going to try really hard. But here's the thing, Wilford. 2 to 3 rate cuts are already built into market expectations. There's the futures markets are anticipating with a near certainty that we're going to get a rate cut in September, probably one in October, maybe one in December, and maybe one even next year. That's already built in. So that is what the markets anticipate. Here's the other point. If we actually do start to struggle and the economy starts to weaken, we go into recession. In a typical recession, the Fed lowers the funds rate, the rate they control, by 5 percentage points. Of course, the funds rate today is at 2 percentage points. So, yeah, they're going to try, but they may not have enough ammunition to help bail the president out if he continues to pursue this war.
The rate cuts are built in, but it is a 45% tariff on all U.S.-China trade. Is that built into market expectations? That's what the president said back in 2016, and we are far closer to that level than anybody believed possible 9 months ago.
I guess I just wonder how people support him going tough and aggressively after China, Jimmy. Doesn't that work with his base? I wonder if he can continue to walk this line without tipping the U.S. into recession. He's got a very good economy and consumer economy in particular. And also, with the Democrats also trying to talk tough around China, gets political points for doing so.
Listen, consumers have been pretty well shielded from the impact of these tariffs up until now. But obviously the tariffs have expanded. They're escalating. They're on more trade, and the rate is going up. And listen, you even have some of the president's advisors already talking about, well, if there is a recession, it won't be that bad. Clearly, I think the administration's worried about it, and I would not want to be running for re-election, if I have even a mild recession in my election year.